Hello, and welcome to the Block Solid podcast, where we talk about the evolution of property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, the entrepreneurs, and the lawyers can benefit from it all. I'm Jaguel Tamar, co-CEO and co-founder of Solid Block, pioneer in real estate tokenization, and I'd like to welcome my friend Jaguar A.dva Gal as my special guest in today's episode. What's up, Jaguar? How are you?
Hi, Jaguel. I'm very good. Thank you. Thank you for hosting me.
Absolutely. You're looking great and you're sounding great. It's been a while.
Thank you.
Yeah, I'm just so happy we're catching up, and it's always fun to catch up over a podcast, isn't it?
Definitely. It's really fascinating, and I recommend everyone to listen to all chapters, not just to mine.
Oh, thank you. Thank you. Where are you sitting right now?
At my office, one of the rooms, the quietest room, because we have a large meeting room, which is packed right now. I'm at my office, which is at BSR 4 Towers.
That's awesome. I'm going to be there this Sunday, so maybe we can catch up.
Yep. They say that our coffee machine is divine, so let me prove that to you.
I know, exciting. Okay, so let me give the listeners a little bit of a taste for what you do. So Jaguar A.dva Gal, a.k.a. Jag, has a rich professional background with expertise spanning many aspects of law, with an emphasis on law as it pertains to fintech, blockchain, and crypto. She's actually one of the first crypto-focused lawyers who I met in Israel back in, I think it was 2018. She has managed international strategic investments in startups for the largest global VC, Intel Capital, and also worked with large corporations such as Intel for many years. She sees herself, and others see her too, as well qualified to bridge the duality, the relationships between the old world, meaning banks, regulators, and governments, and the young world, including blockchain and cryptocurrencies. And I might add, one can frequently find Jaguar in courtrooms fighting the big guys, doing the holy work. You know, I would even call you the Robin Hood of the crypto masses. I mean,
maybe with the feminine side, maybe the Amazon.
The Amazon, okay. The Amazon protecting.
Someone needs to go down the trenches.
Yeah, someone needs to protect the freedoms of paying with whatever you like, right? In the IDF, which is Israel Defense Forces, Jaguar was an attorney with the rank of lieutenant, leading a team of officer lawyers and representing the IDF in major civil rights cases. She holds BA degrees in economics, accounting, and an LLB law from the Hebrew University of Jerusalem, and MBA from Rekanati School of Tel Aviv University, as well as Georgetown University.
Studies.
All of that is studies. Yeah, incredible. So today you're launching a Bitcoin tracker fiat fund, and you're a chief executive officer at Jaguar Lawyers, a global law firm servicing corporate clients with contracts, corporate and securities law, banking, anti-money laundering, and taxation. The company's main focuses, or foci, I guess, include cyber law, data privacy, regulation and compliance, fintech, blockchain, and crypto. And those are the main ones. I guess there are others too. Jaguar is also managing partner and CEO of the Jaguar Consulting Group, offering regulatory consulting services to companies and investors. So you served as a CFO, COO, and VP M&A in a number of prestigious companies, such as Power Design, the Inspire MD, Schema, and Oplon. So all of those, right? And you're also M&A manager at Deloitte, one of the big 4 consulting companies. You've been involved in wide-ranging investment portfolio management for the world's largest venture capital fund, Intel Capital, as well as initiating, conducting, and leading strategic investments in startups and other seed initiatives at Intel Corporation in Israel. And I know you as a frequent speaker, as we cross paths at many conferences, right? Yep. And we did a few interviews together at Block TV. And I see your name at DeMarker, Globes, Calculus. Those are Israeli newspapers, and some TV programs like Tzinoor Laila in Israel. I've seen you lecture at different conferences around the world, Bangkok, Cyprus, Greece, London, Malta, Singapore, and you're writing a first book on blockchain and the law. When do you sleep?
I've given up on that habit.
It's unnecessary. We'll sleep when we're dead or retired.
Exactly.
I mean, yeah, that's super exciting. I mean, among all these things you're doing, what's your favorite?
Well, first of all, I must admit, I'm a CPA and a lawyer, but I'm also a CPA. swear to God, I'm a good person though. But but still, being a lawyer is one of my say positions in life, etc. But I see myself as like a meta consultant, but without derogating down to the level of being just a consultant. So my counseling services are they could be financial ones, and these are a lot of the positions I've taken in major high-tech companies, as well as at Intel as well, even a few years before all the other companies. So I do like financial engineering in one sense, and I utilize my legal background in the law, more specifically, not just the law, but my regulatory advice capabilities to enhance that and to enable that. Because for me, at least, there's no point of using the law just to make contracts or securities, regulations, advice, etc. If we're not using this to help our clients getting more money, making more money, utilizing their money, and getting any strategic business financial value from that. Because doing law just for the law of it is too academic, at least for me. So being a very pragmatic person, my main focus is finance, utilizing law for that, I would say. Does that make sense?
So from what you're saying, it seems to me that you're taking a holistic and strategic approach. When a client comes to you and let's say they have a specific goal of whether, give me some examples of, I don't know, get a bank account in Israel, or to how can we structure our compliance in order to sell to clients in a specific jurisdiction? Are those kinds of things that you're dealing with?
Yeah, definitely, yes. I have two main focus areas, one of which is cyber law and compliance to data privacy. I'm also a certified data privacy solution engineer, although I'm not an engineer. It's just the title. It's called CDPSC. And I make sure companies are compliant with the privacy regulations in several countries. In Israel, these are the data privacy regulations and the law, although the law is pretty old. All around Europe is according to the GDPR, the data privacy regulations, which are all European and even apply outside of Europe. And regarding the States, it's mainly so far, the California regulations called CCPA, which kind of state the level, make the level for the point for all the other states to follow them. And so pretty soon it's going to be a federal regulations regarding data privacy. That's one field of my business and my doing. And I'm very careful of saying my expertise because as lawyers, we have very strict ethical rules of this is I'm going on that. So the second area of focus for me is blockchain related. Blockchain is a database, and crypto or currencies, Bitcoin, I would say, which is more the monetary aspect of it. And I do a lot of legal work in that area. And this is very, very new legal work because we don't yet have laws for that and regulations stated so far specifically for this kind of new technology-enabled finance. So what we'll need to do, and which is what I do, I use analogies from current old-style rules and old-style laws, which are referring to either securities or assets or currencies. And I try to see the differences in the gaps analysis and even the mutual aspect to use those existing laws so far for the crypto-related industry. So I do that regarding privacy on one hand, which is we're talking about a database, which is at least the blockchain is a pseudo-anonymous, but it's not really because it's very open. And of course, regarding monetary elements, which are banking, for example, if someone wants to sell their bitcoins, I'm using bitcoins as an example for all tokens and currencies, cryptocurrencies as well. If you want to bank this, you're going to have some serious problems, not only in Israel, but all around the globe, in most countries of the globe. And banks, at least in Israel, are obliged to give service, to give banking services. And this is quite specific to Israel. And this is why I utilize the Israeli legal system to lead and actually very recently win a very high-profile district court case of banking refusing to accept crypto-originated fiat in the bank accounts, in my client's bank account.
Who was the client?
A couple, Roy, Nifat Arav. But I'd say the identity of these two very cute and charming and amazing clients is not as important as the point that they were leading, because their point is actually relevant to many, many, many other crypto investors. And the point was that, hey, banks, at least in Israel, you kind of have to, by law, by the banking law, kind of have to serve us as long as there aren't any AML, I would say, anti-money laundering concerns related, which are specific to ourselves meaning the bank clients.
Got
and
it.
as long as they're none, then you have to accept our funds.
That's awesome. Was that a
Yeah,
landmark, kind of a landmark case that you can use as a
definitely
precedent?
so. Definitely
Okay.
so, because the very minor cases that existed before, and the very few, there was one that was not really a case. It was a court decision to accept then that was a condition, a non-precedential, I'd say, mediation process of
Yeah.
agreeing between the parties, etc., as long as it does not apply to anyone else, which was kind of sad for the
There was
community.
something with bits of gold, wasn't there?
Exactly. I'm referring to bits of gold. Exactly.
Yeah.
They had an agreement outside the court, which was a mediatory kind of. And the point for that and the condition for that would be as long as it does not apply to anyone else. And, that
wow.
we can't use that
Can't
way.
use that.
And,
Wasn't there the Bank of Israel that issued a directive to the Bank of the Bits of Gold? Right?
in the case that I was leading in the district court in Israel, there was requested the opinion of their whole regulator's opinion, not just Bank of Israel, but Bank of Israel, the anti-money laundering authorities, the taxation authorities, the security exchange authorities in Israel, and all regulators were joined together. It took him about 18 months or so to delay the case in that, but to get a whole pan-regulatory opinions. And so the General Counsel of the government has given a whole opinion with somewhat of a different opinion from the Bank of Israel, which was more harsh, more conservative in the case that I was leading. And we used that opinion. And the opinion was just as it should have been on our point, which was banks cannot sectorally, categorically deny crypto originated fiat funds in the account, as long as only if they have a very specific reason to refuse those funds. And as long as you don't have those specific reasons and base for that, which are more anti-money laundering related ones, and as long as the clients are law-abiding and tax-abiding citizens, then you have to receive those, providing that the client gives up the whole audit trail and the currency trail and fiat trail of the funds that are requested to be in the bank. So it was a very precedential case in many aspects.
This one that you just finished.
Yeah.
Okay.
Yeah, exactly. And there are many more on the go already. And there are many more processes which I run vis-a-vis my clients and the banks, which are pre-legal or pre-litigation. We're trying to avoid litigation because it's long, it's expensive. Not expensive because necessarily I'm the one who's expensive, although I'd be happy to, but it's expensive because it's very long and tedious. And the banks are using, as they should naturally, large legal firms, whose, let's say, goal would be to make the other side of the legal fight more tired and to try to, derive all the funds from the clients. So what I'm trying to do is do shorter, more rational, because why fight if you can have it in good faith?
Yeah,
exactly, via mediation. And I'm trying to get my clients' funds at the bank. And theoretically, banks should be happy. The clients are so-called coming back home to fiat. They've sold their whatever bitcoins or other cryptocurrencies.
Happy to pay taxes, right?
Yeah, into fiat. They pay taxes. Actually, you need to pay taxes even if you don't go back to fiat.
Yeah.
As long as you exchange crypto to crypto, you still owe taxes. And I do that. I represent clients vis-a-vis the tax authorities to better calculate, meaning more optimally calculate their profits, and then by that to report and pay their taxes. So I'm more aware, I'd say, from many other fantastic, amazing lawyers, a little more aware of the taxation issues and procedures and requirements, because I do that as well in my other capacity, not as part of my legal firm, but part of my accounting
practice. Right. So first of all, congratulations on this court case. It sounds amazing. I mean, you're kind of like the Harvey Specter of the crypto world in Israel, On the one hand, like scary, the bankers probably see you on TV and they're like, oh no, not Jaguar again. And then
I'm complimented. I would like to think that they're not as afraid, but because basically, financially, business-wise, they want those funds. They're just very afraid, rightfully so, to some extent, of the fat F fines that they might suffer. And as I was told by one of the chief compliance officer of one of the banks discussing this case offline, he told me that, listen, it's going to cost me a lot less to lose on a case to you and your clients, all of which, than to do something that I might get $700 million of a fine from the FATF, International Anti-Money Laundering Organization. So it's cheaper for me to lose. So they want those funds. They actually want or need to lose. They give a very good fight. They give a great fight, I must admit. They're making my life very hard on that. But still, they kind of need to lose. They need to have, say, a judgmental decision on this, kind of enforcing them to receive the funds. And then this way they'll have a great excuse.
I love it. I love it. Well, on the other hand, I like the fact that you're prone to mediation and, want to negotiate and find a good solution on behalf of all parties. And and definitely appreciate that. So for me, I asked you about what do you enjoy the most. It kind of sounds like what really sparks your interest and, gives the sparkle in your eyes is like the court. I'm going to court, I'm fighting the fight, or even when I'm mediating, kind of finding the best solution for a client. But tell me more about like what you enjoy more, startups or corporations, crypto, blockchain. Yeah.
That's an easy question. Yeah. I love startups. I go and surround startups, I would say, all of my life. I'm like the black sheep in a family of engineers and programmers. My uncle was the CIO of Morgan Stanley, of Bank of America, of Wells Fargo, etc. Huge American banks, international banks. So, and he's like a Mamram veteran of Israel, and he's a very techie guy. My father is a techie guy. My brother is a techie guy. Even my mom, who's done something which is halfway to being an engineer, to do something in construction, is semi-engineer of that. So I'm a black sheep who went to law school and to do accounting faculty. So
only in Israel you're disappointed when your daughter is a lawyer, right?
Exactly. So I had to compensate for that. I had to, to give them back something. So all of my career, I've dealt solely with startups. Although I've served corporations, and I'm very well advanced with corporate America culture of working with them and for them. But the excitement is where the risk is higher and the potential is higher, and you're working for a dream. And I would much love working for a dream, as long as the dream is not too small to pay my fees, of course. But still, at least there's a chance. There's like a joke about the person who's complaining to God of why is he working at a corporate and he never has an exit, etc. And, God tells him it's very, I'm using this from another joke, telling them, all right, I'm not sure that you'll win. It's kind of like the chances of exit for a startup might be as low as winning the lottery. But hey, guy, at least get the ticket, work for a startup. So I think that's the best excitement. I work with corporations a lot, but the excitement comes from startups because they're the future.
Yeah, I am 100% agreeing with you on that. That's why I've been doing startups all my life, or at least in the last decade. And it's definitely, when you wake up in the morning, there's so much excitement and hope. And then we also get to work with amazing people and advisors and lawyers who are making what we do possible, Without you guys, regulation compliance, this field, blockchain and crypto, would be impossible for us to do. Right? Because there's so much to navigate.
Yeah, because we still need to bridge the gap between the old world, the fiat money, the fiat old, fiat is the money that all people use, and in order to bridge that to the new world of us. And that bridge is very much required because we're not there yet. Bear in mind that Bitcoin and blockchain, at least the white paper was published in 2009. It was used as money, as currency for the first pizza acquisition or purchase, I would say, in 2010. So this coin, so-called, is a baby coin. It's not even 11 years old. It's very, 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 it's an infant. It's very small and very young. So until the time that we'll have Bitcoin and other maybe other tokens or currencies as real currency, and it would be regarded by law as such, this will take time. So we're now at the cradle of the new finance and new law regarding that. And that's very exciting times to be in.
Yeah. So as far as the new law, it's different, of course, in Israel and in any other country. But how do most countries deal with this? Do they go and create laws, or do they create these endless opinions and resolutions? What is the best way that the government goes about it, and what should startups look out for in order to operate in specific jurisdictions?
Well, the choice of jurisdiction has several elements to it, one of which is the regulatory development of a country when you choose one to be established. Another reason would be tax regulations and tax regime to prefer to be residing in, which is another consideration. And other considerations could be copyright defense, or at least say barriers at least. And regulations would be just one of which. This is why you see crypto-related companies being established in Estonia, Lithuania, in Singapore as well, in Gibraltar, in Malta, and to some extent in Israel. So you wouldn't necessarily see them only at tax havens or tax shelters in the world, because tax is, I'd say, a major consideration, but not the only element to consider. Regulation is much more important. And what countries do so far, most countries, not all of them, we use old laws to relate and to regulate and control new technology. And that's, of course, that's lagging and that's hard, because law needs to develop as fast as technology, and it never does and it never will. For one reason, because it is made by employees who work for the government, and they don't have the stress of waking up at 2 a.m. as probably you and I and most of our colleagues and the ecosystem would do, just because it's something very harsh to get, and otherwise your whole startup might go bankrupt and you won't be able to pay salaries. I mean, they're stressed as well and they have a lot of burden as well, but it's not as if you won't have enough money to pay your people if you don't do whatever. So their speed is different, the procedures are different, the bureaucracy is very hard on them as well. So the pace of progress and the necessity to make a progress for them, I would say not a tenth of what we do, but 1 divided by 100 of what it's like a percentage, wow, a small percentage, a promille of what we have. So they're lagging behind in many cases, in many instances. I would say that look at even tokens, utility tokens, security tokens, the whole argument that was here the last, say, up until a year or two ago, for 2 years that it was in fashion. At least the US Securities Exchange, they were using the Howey test to define whether an asset is a security token, a token is a security one, or a utility one. And, that's fine. But bear in mind, Howey test is a test of, I won't say 200 years old, but almost 200 years old, over 100 years old, of someone having an orchard of oranges. With all due respect, we need better tests, better legal decisions to rely on. For example, the ones I was leading when I'm trying to change that and to progress that and to renew that. So we're using old tests, old laws to decide upon new technology. And a lot of changes need to be made. In the States, for example, regulatory-wise, we have Regs A and Reg D, for example, which refer to blockchain-related, crypto-related assets. We have many advancements, but it's not the same for each state. And definitely so, it's not residing in every country. So there's a lot more to be done there. And I can tell you from my own experience trying to incorporate a fund in Israel, I have a lot of discussions vis-a-vis the security exchange authorities here. And a lot of the answers that I get, as well as my clients with many other financial endeavors like that, is something like, in the language of, it's not at the top of our priority right now to make time for that. So we have better securities related issues, more harsh or more, I'd say, urgent to deal with. So we're not urgent yet enough for the authorities to adapt their regulations.
Except when they go around and warn people against cryptocurrency, like they did yesterday, right? Or was it maybe early hours of March 1st, right? I was really surprised that the New York Attorney General, just went out and reiterating cryptocurrencies is high risk, unstable investments that could result in devastating losses just as quickly as they provide gains. And that announcement actually came after, I think, one of the UK enforcement officers also did a similar kind of warning, right? I was also surprised that the Bitcoin market just didn't bulge, because I think people are just so used to and the government saying things against crypto. Another thing was really interesting for me is that so many New Yorkers and New York State residents are leaving for Florida right now. They're just getting in their vans, the U-Hauls, just driving down, I think it's I-95, just, to Miami or Fort Lauderdale. And that's a state where the mayor of Miami loves crypto. And it's just so surprising, this difference, Yeah. So what do you think about that?
You gotta give Florida some points for the sun and the fact that and the fact that we have the COVID-19 right surrounding us right now, because people will hear this podcast years from now. So we need to remind them that we are at the beginning of 2021 and we still have a lot of the Corona elements as well. And in Florida, people can live more, I'd say, more in houses rather than in apartments, and you have much more open space to be in. And I think that's another element as well. Although you're very right, the mayor of Florida has declared that they'll even pay the municipality employees with Bitcoin, which is a fantastic, at least, opportunity, I think, for whoever is there for the long run. But we gotta give something for the regulators, though. I kind of agree with them that it's risky, but my answer is that, hey, using the US dollars and the way and the amount that it's printed and the speed that it's printed could be even riskier. It depends on how you look at it, for the long run or for the short run, because I do agree with them that at least the Bitcoin prices and all other cryptocurrencies prices as well are very volatile. They are. And if you buy in, let's say, your pension money and funds, etc., and if you buy a lot and then price decreases by 20%, and you might need that money back, your fiat money back very soon, then you're at very high risk.
Yeah.
I wouldn't say that the securities are not risky. You look at GameStop, many other plays, I would say, in games in the securities market recently, but still, it is very, very volatile. So volatile means risk, because that's the way we measure risk. We measure yield divided by volatility, I would say, or risk.
There's major difference too from buying securities and buying cryptocurrencies. In order to buy securities, you have to register at least on the stock market or somewhere. Whether a cryptocurrency, I could come to you with a ledger on the stick or even open an account online and just go and buy a huge amount of cryptocurrencies. The only other similar market I would say would be kind of loans, and which also doesn't have extensive regulation around it, as far as I know. Might be wrong. But yeah, maybe that's what they should be stressing when they're talking about the risks.
That too as well, plus the volatility, plus the fact that it's a file. After all, it's an electronic kind of a file, or not really a file, it's an electronic transmission. So that means, having said that, people and hackers might want to hack it. So there are ways to protect it, and as well as all our other fiat funds, because bear in mind that even our money in the bank is actually a digital money, because it doesn't sit there with bills sitting on top of each other, right?
Yeah.
So this is why I so much oppose calling cryptocurrencies as digital currency or virtual currency, because it's definitely not virtual. And it is digital, but everything is digital nowadays. So, there's nothing special about saying that it's digital. I would call it distributed currency. And this is how I insist on calling those currencies. The special thing about them, at least about Bitcoin, is that it's distributed and it's not decentralized. Sorry, not distributed, and decentralized. And it's not held by one governor or one control or one jurisdiction only. So I would say for the banks that it is risky in a sense that it's a file, or at least an electronic element. That's one. And that its prices are volatile. However, for the long run, Bitcoin has been declared dead so many times in the last almost 10 years, and it continues to grow. It grows because more and more people are exposed to that. Less and less people are, very few now, are of the black area, black shades of the dark internet, etc., because of that anonymity. More and more regulators are looking at it and are requiring KYC procedures from stock exchanges.
Know your customer, right?
Know your customer. KYC is know your customer. So you need to identify anyway. So you can't continue being a criminal and using Bitcoin as much as you like in the exchanges, etc.
Absolutely.
So
And
So
the FBI has been really, really good lately. I mean, back in October, I read a statement from Attorney General of the overall US, not New York. By the way, the Attorney General of New York made a splash in the recent months after they went after the Bitfenix, right? And because Bitfenix, which is basically responsible for Tether, one of the stable coins, they were hiding taxes, right? They were accused of not.
Which is a shame.
Yeah,
because
reporting. Mm-hmm.
You can be an actor and a player in the cryptocurrency world, just like in any other industry, and still obeying the laws. Once we have some people disobeying the law, breaking the laws within our industry, the crypto industry, then it gives a shadow over the whole industry. And that's really a shame because criminal and tax evasions exist in any other industry just as much, and even much more. So it's a shame if
it is a shame. And also, but you know what? I was thinking, I kind of get off topic, but I'll get back to it. The whole thing with Bitfinex, which is amazing to me, is that you have, a supposedly decentralized stable coin here, and you have a sister company, right? There's sister company, right? The Bitfinex, which is an exchange, right? And an exchange, of course, is a centralized exchange. So it has obviously a jurisdiction, it has a home, which is New York State. Like what you are mentioning is the bridge between the old and the new. It seems like in this situation, there's also a misrepresentation of decentralization, at least in my view, in terms of Tether. And the people who invested in Tether must have suffered some losses from this development, I think.
Definitely so. Yeah. You look not only in that, look at XRP as well.
Oh, yeah, it's true.
It should have been, or it could have been, a fascinating bridging idea, having a coin, a currency that will be used by the banks instead of fighting them, just joining them. And, maybe in someday replacing the swap and all the other global intrabank systems. And it could have been a great idea. And it still is. So a lot of people invested in that. I even had a fondness to that coin as well, because the company is called Ripple. And Ripple, in Hebrew, it is Advent, which is one of my names, my first name. So I could have said that there's a coin on my name, but not really, right? So
not after the fall.
And even when before that, it wasn't real. But I was more fond of that currency specifically, and it had a good idea. It's not decentralized though.
Not only wasn't decentralized, apparently, Attorney General is claiming that the currency Tether is supposed to be fully backed by US dollars. And that's why people are investing in it or using it, right? And it wasn't.
So they declared they're not going to be 100% pegged or 100% covered by the base asset. We call it the base asset.
Yeah.
But still, if you oblige to a specific percent, then if you oblige, you need to follow your commitments.
Yeah. So I was referring initially to the Attorney General, William Barr, who's the Attorney General of overall the US. And the report that they put together, which I thought was very favorable, was talking about the dangers of cryptocurrencies and how there's hacking attempts and the criminals and terrorists trying to use it. But the FBI is on top of it. The FBI is creating their own technologies to track. And, while crypto, of course, is a new industry, his message was like, we're dealing with it. And actually, he wrote, cryptocurrency is a technology that could fundamentally transform how human beings interact and how we organize society. And then he says, ensuring the use of this technology is safe and does not imperil our public safety or national security is vitally important to America and its allies. Vitally important. So, I thought that this was great, right?
It is. It's a great, it could be, speech.
I know, right? Definitely favorable. All right. So I have just a few more minutes with you, and I want to talk for a minute about what we do here at Solid Block, which is real estate. And that's a whole other branch of law. And that's also, like you said, combining the old and the new, or bridging the old and the new. That's the most traditional industry out there. It's touched by taxes, compliance, even before we get into crypto and blockchain. So what do you think about real estate tokenization and which hurdles we're facing in this industry?
I think what's most fascinating in that legal area of real estate when it combines with the blockchain industry is I'd say the width of the gap between them and the amazing bridge that we could build, because one of the main points of at least Bitcoin and many others is that it's electronic. You can't touch it, and therefore, if it's electronic, it can be dividable. For example, Bitcoin is divided to 100 million satoshis, right? So you divide it to very minor pieces, I would say.
Mm-hmm.
And if you are able to divide it in a way that is very unified, you can be an owner, a renter, or maybe having a license to. You can have rights to very small particles of it. However, when it's real estate, that's why it's called real, because it's very real estate. It is something that is built, or it is located, it is stated on a ground, which is supposed to be totally the opposite of the idea of electronization and having everything intangible. So when you breach that, you can allow real estate holders to not just hold one very specific unit of real estate, for example, an apartment or a house, for example, or a specific land. Because when you have an apartment, a land, or a building even, it is very specific. It could be that there might be other apartments in the same building that are very similar, but they will never be identical, not in their directions and not in many other elements, not in their heights and their location, and they will have different values. And when several people want to own, just take, for example, to own together an apartment, it is very difficult to give them percentages and parts of ownership. You can register that with the authorities, but then the law says that, for example, if you have 19% of an apartment, it means, at least in real estate, that you have 19% of each and every, say, particle of dust and land and sand and blocks and materials in that apartment. You don't have a specific 19% of that apartment. And this is very hard because you need to have a lot of agreements and signatures, and the ability to divide it, to rent only that part is barely almost impossible. And the way to sell it onwards to other people and to use it is very hard to divide that. However, and that's even true when you buy a complex of apartments or offices, etc. If you want to break up a partnership between several people and divide the elements, and you have a lot of apartments or a lot of offices, you will need afterwards to do a lot of very long legal work of specifying what specific elements and assets each partner might hold. However, when you use the blockchain and the technology for that, you're able to give each and every one a partial right, a partial ability, partial ownership of elements of real estate. So you can give an electronic representation of the real world meaning the real estate world, in the electronic world. And this is, in many senses, it's digitalizing the real estate. And right. I think that's a very fascinating bridge, and that can be also used for loans, for doing futures or derivatives over the loans and over the real estate itself. You don't have to own the asset by itself. You can also own derivatives on it, the right to do something, the right not to sell, to lend, to rent it, to go through, to pass this, to make noise or not, to change the visuality of it, and many other rights that you can create and build upon one piece of real estate.
That's very interesting. I haven't thought about it that way, frankly, but we are working here on creating derivatives of the token, kind of like options and futures and index funds and benchmarks and things like that. And we're also working on collateralizing tokens to enable users to get loans from the DeFi and also CeFi, centralized finance and decentralized finance markets. So I appreciate that thought, Jaguar. Definitely will think about that one as well. So thank you for joining me today on Block Solid Podcast. It was great having you on.
Thank you for the opportunity. It's a pleasure. Yep. And you should even mention the fact that Solid Blocks is on the road for a while already and representing values. And I've tackled a lot of instances that you were presenting all around the globe to many, many international clients. These are only the parts that I was able to see, and I'm not part of SolidBlocks myself. So if that's the only part that I've seen, there must be a lot more.
There's quite a few things under the cover, and I'll be happy to share. So you can find us on Spotify, Apple Podcasts, or by visiting our website at solidblock.co/podcast. If you enjoyed the show, don't forget to rate and review and spread the word. Thanks, Jaguar.
Thank you, Yael. It was a pleasure.